Okay, so we're picking up right where we left off in part one, where we considered market structure and the basis for a trade plan and how we decide what strategies and tactics to use. And we're going to just pick right up where we left off. And what I've done is taken those same price action bars that we looked at, and we drew conclusions of some basic market structure principles to give us an idea of what the market was developing. And now I've added the very commonly used levels that almost anybody who trades support and resistance and levels looks at the previous day's high and low, and either today's open or yesterday's close. And what we're looking for are indications that the market is either respecting some level of fair value, levels that were held and provided support or resistance, and situations where the market then maybe tests a level and succeeds in breaking it, and then we have a new extension of a range to find value at either higher or lower prices depending on the direction of the breakout. So what we're seeing here is this is the previous day's high. I use the big green dash line for the previous day's high. And I'm also using the pivot levels, which have been around forever and still work just as good as they ever did. And so we have resistance level 1 and resistance level 2. And previous day's close or today's open, they're usually not that much different. A few ticks or a couple points difference usually between the prior close and the night session open. And the pivot for the day is way down here. So that's enough information going in before the market indexes had opened up. 8:30 Central Time is the old-fashioned opening that is still traded heavily. And we see that before the open, between 7:30 and 8 o'clock, price already was strongly indicating that the buyers were playing the break of the previous day's high. So this is where all this price action consolidated. We had a pretty good fair value here, and then it was broken. Now, where's it going to go? Well, it's amazing how often it goes right up to the next resistance level. That's why we use the pivot lines. So what we're doing, we're using very simple indicators as opposed to using, even though we're always using market profile principles, which you can study extensively on my first blog. This same principle is demonstrated by using the pivot floor trader pivots. And we'll find day after day, whether it's a long, strong trend or a sideways inside day, that these levels come into play, and they're very instructive. So we break out here above the previous day's high before the open, and then the buyers continue to demonstrate their domination until, as usual, 9 o'clock or 9:30, under, at least for most recent indications, are this kind of behavior. And we have a lot of information that maybe we can start bridging the gap between this analysis of market structure and creating a trade plan to take advantage of the knowledge that we're gaining by being able to look at the chart and draw conclusions. Now you see I've also added a single moving average, and it's a 21 period exponential, which is used by millions of traders, at least. Anyway, the price is always on the north side of the 21 moving average, all the way up to the high. And then remember, we talked about, we got these 3 lower highs that were telling us the retest was failing miserably, and that meant the market would likely go in the other direction and see how far they could probe or extend the range downwards. And maybe to test again whether this previous day's high was going to remain broken. As it turns out, it was broken to the downside. So now this is a lot more information to find places to make our orders. if we're going to trade resistance levels, what we're doing basically, it's a lot harder when it comes a little short like this, 1775, and the resistance level was 19. So, 5 or 6 ticks, whatever, is still really close to that R1. So we can start combining patterns and look for ways when we decide that we are confident on what a market's doing, we can start using this moving average as a very good kind of obvious tactical strategy, considering where price is in relation to this moving average which we use consistently. And what happens is when price gets a long ways stretched from that moving average, that's usually a sign that something will happen soon to bring prices back to that 21 period average. That's what everybody calls reversion to the mean. So we look for extremes. If we're a counter trend trader like I am and a scalper, it's amazing how you can just trade this one principle and make income, daily income off of it. And that is, we're looking for extensions that get overextended, and we're looking for an indication that the market is running out of gas in that direction, and then we'll take advantage of what we're seeing and make our trade whatever level, whether you're going for 2 or 3 points or 5 or 6 points. It all depends on the precision of your execution and the volatility for the day of all the participants. But this was a really good trade, and it's what they call a ring pattern. So we can identify price action rings where you had a bar that had a lower high in front of it and a lower high after it, and the low of that signal bar was broken by the third bar of this ring. So this was the ringed high up here. Maybe put a ring around it. And this 3-bar pattern can get you into trades. It's giving you a solid indication that there's been a short-term reversal. Now, being overextended as it was, this was a good long red bar, and the next one took out the low. So you're expecting a target down here, and that could be quite bigger than an average scalp. If you're getting short around 16 and the moving average is around 10, that's 5, 6 points. So then we also have an indication where here the bars, highs and lows are about equidistant above and below the 21. That's what you call the noise or the chop or the value being very, very solid. They're not willing to make a commitment to the buy side. They're not even going to bother to retest any higher than these failed retests. And if it breaks, you have various ways. A trend line is one that we mentioned before. You can get an entry out of that. So we can look for, this would be the simple trade plan strategy. We look at the first half hour of trading, 9 o'clock Central, or the first hour, 9:30. We get a structural indication that gives us confidence to take a bet, let's say, take a bet on the next direction. And then we create our parameters to see if we can get a confirmation entry. And that would be done with something like this break of a trend line, or something like a break of the moving average, and then the next time it comes back to the moving average, getting in that direction of the initial break. So that's what you call a retest failure of the prior direction, or we could call it the support was broken and then it became resistance, and if the market comes up and tests that resistance and fails again, then it's an indication your bet was confirmed and they're going to go down for a while. That's simple. Now, again, as a counter trend scalper, we get a level. We draw in our line at that level, and we can take scalps that are, the price action is showing respect But now, with this additional information of the resistance, resistance 1 was broken, and that becomes an excellent objective entry parameter, that the R1 level, when it gets significantly broken like this with many, you know, a half-hour trading or an hour and a half or 2 hours, whatever, in this case, you know, that thing was broken around 7:38, and here it is 11, you know, almost 4 hours, whatever. And so we're trading in the direction now of the downside, the bars that are underneath this 21. And any time we get a little counter trend rally, we simply put an order in wherever we think it can be closer to that moving average. It's some days it'll be touching it a lot. On this day, it hit it here. It almost hit it here. And then it went through a little bit here. Now, if you're observing that and you draw on your line, you see that none of these bars were able to close above that pivot high. Then you can get in anywhere here around the 21 or this point of resistance. And that turned out to be another great trade. Now, they regain, or rather they reverse back against the early morning breakout of the previous day high. So now that previous day high is once again a ceiling on top of the price action. So you can be selling approaches to that level. Here you had one that became a shooting star. We like those candles, the shooting star pattern. So we're selling a double top here, basically. Up here you're basically selling a double top and a triple top. And because it's in the area of resistance here in a market that's been confirmed pretty decisively to have broken that support, what used to be resistance, and now it's broken support again. So we can continue to fade. And remember, as a scalper, it becomes very easy to get whatever, 4 ticks in the NASDAQ, 6 ticks, 8 ticks, 12 ticks, whatever. If you're selling around the 21, and it can be general, it doesn't have to be right on it or 2 ticks above it or 2 ticks below it. You just combine all the indications of the price behaviors, and that's what you trade off of, is a general range, a general zone, a general area. That way you get more trades, and you can have tight stops, because your stop would be just a few ticks maybe above that bar, or maybe you put your stop above that previous day high again, because that's reinforced resistance point. But all these places, now we wouldn't necessarily want to fade this one because it's potential double bottom. It's potentially holding that support there. So we might not want to fade this one, but this one was still, it just touched it, and it's right up against holding almost to the tick on the 21. But we could wait till there's another confirmation or whatever to see how, if we can get something that's more clear, more confluence is stronger on different ways of looking at the structure and the price levels. So what we gained at here, we talked about this a little bit earlier, we regained this level which had been strong support and got broken. We regained it here. So now, with that bar that broke and showed that you've regained the previous level, this breakout bar here, it's also a full bar on the other side of the 21 moving average. So once again, the 21 moving average in that case would be a good place to put a limit order in, or somewhere near it. Now this one, let's say you might have missed because you were holding out for, let's say you were holding out for a level there. So you were a little bit short. The price only pulled back from 90.75 to, see, 88. So it only pulled back 7, 8 ticks, 9 ticks, whatever. might have been enough ticks if it was a little closer to the 21. But so things didn't come together for an ideal entry there. But the first time it actually touches it to the tick, it turned out to be almost the low tick. And that's a great place for an entry. So just the simple having one moving average, having our pivot, floor trader pivot levels of the pivot and the resistance, and the previous day's high, low, and close, or the current day's open, whichever you like better, use that one. And we've got a map. We have a blueprint. And we can find a lot of ways to get into trades. Now, all of this is on a 2-minute chart. You can do this same thing. You can put up this 2-minute chart to get a visual of the structure, and right next to it, you can put up 125 tick chart or 125 volume or whatever, and you can do the same thing we're doing here, looking at clusters. The shorter time frames let you get a feeling for this market profile kind of information, where you have ranges, where there's rotation. And then you're looking to see if that value gets extended somewhere by breaking either the lows or the highs. So that's what we're simply doing here. We're looking at the direction of the market based on how it responds to support and resistance, key structural levels, and patterns of behavior at those levels. So we can look at this a little more with indicators, and maybe that'll be the subject of another video down the line. So I hope that's of some interest. We can expand on this. If you have questions, you can contact me. I have my contact information on the blog here. And I give my phone number even. I give them, let them have it. It's so hard to find people's phone numbers nowadays. Anyway, if you have any questions, and you know, we could go on for 5 more hours on this video, but I just wanted to show a simple, very simple kind of a way of approaching structure and using the market profile principles, but without having to spend, you know, $400 a month on their software or buy their software for $2,000 or whatever. Just using the tools of support and resistance that have been around for decades and decades and tried and true and worked. They're basically doing the same thing as market profile if you find ways to develop your perception and your tactics around this the very consistent and profound information that comes by looking at the structure of the market and these very good mathematical tools which traders have evolved and work just as good as ever. Okay, so I hope that helps, and happy trading.